say this every time, but I am excited whenever I can welcome someone to this show that brings a tremendous amount of value to not just my business, but also to your business. And Melissa is one of those people.
Hi!
Melissa is a chartered professional accountant, and I know she looks really young, but let me tell you, she has so much knowledge when it comes to all things accounting. And I thought it would be really valuable for all of us to learn a few of the starter tips and tricks on, now that you have your business, how can you set yourself up so that you don't have a really high tax bill at the end of the year, and not because you made too much money, but because you really did a poor job record keeping.
Yeah.
And also on how to get it set up properly right from the get-go while you are starting, because isn't it true that now is the time to really set yourself up for success?
Absolutely.
Because it's much harder probably to relearn your patterns, and also to set up a business of a greater magnitude with the proper, and you have some experience in that. So let's go there and let's hear what your story is. How long have you been doing what you've been doing now?
I have now been doing this in total for, I guess, over 10 years. I started when I was 18. So I finished high school like everyone else did, and all my friends were going off to university, and I was like, I want to be an interior designer. I'm going to get a job at a design firm. And I did that, and I'm a CPA now. So
wow, that's a full 180.
So whenever I say that to people, they're like, what do you mean? That doesn't make sense.
Yeah.
But I got a job at a design firm, and the receptionist just quit one day and walked out, and she also did the bookkeeping.
Oh, God.
And then I took on that role, became responsible for it, and the accountant there really liked me and started recommending me to other people. And I eventually built a client base, and that's how I got myself through university, did a whole bunch of bookkeeping, and then eventually got a full-time job and started my CPA designation. So
wow,
it's been a long road.
It has. So Melissa and I were chatting earlier, and I said, like, just the advice in this, like, 30 minutes that we were spending together, the advice she already has given me for my business, like, what made you so smart? And she said, well, I've had a lot of experience working with small businesses, and one of them was definitely a turning point for you too, wasn't it?
Yeah, it's always, like I was saying to Yvonne, it's interesting being, 18 and all of a sudden telling people that are a lot older than you what to do with their money. But it definitely opened doors to me, and I was like, I actually kind of like this. Like, I thought I was going to go down this creative path in life. In a way, accounting is creative. Not that many people would say that. But there's a lot of things you can do with it, and there's a lot of job opportunities and just life opportunities. And you kind of have to be able to figure out a puzzle with a lot of things. So
yeah, for sure.
Yeah.
And one of the things that I loved what you said earlier is that you really started to understand that you have a really good logic around money and numbers, really.
Yeah.
And that's super important being an accountant, because if you noticed me, I'm like, stop. Can you say that again? I have to literally, as soon as it comes to numbers, I have to write everything down and I have to visually see it. Then it starts to process. Whereas you can actually see it in your mind's eye.
Yeah.
And you don't need to write it down. So I think it's fantastic that you're here and that you're helping us out with some of the tricks and tips for getting started on accounting. One of my favorite, it is coming up. She's not going to start there, but it is coming up, is we're going to talk about how to accurately price your product and your service. So we just went through all of this together so I can see if I'm doing a good job or not. And I did get the approval.
She did. She did a very good job.
So, Melissa, you brought with you, before we get into it, what do you enjoy doing for fun?
Well, I recently have started doing Pilates, and I never thought I would say I like exercising because I hated it. But my friends are like, you have to try it. It's so awesome. And I have a bad back. So I didn't like exercising for that reason, because I always hurt myself. Yeah. And I love it. I go like 5 times a week now.
Do you really?
Yeah. Oh my super fun. And it's not like, it's like a fun workout. And I don't feel like I'm in a whole bunch of pain the next day. Yeah. It's just fun, and I get to go with my girlfriends, and we hang out, and we'll get brunch if we go on the weekends, or go back home for bachelor night and stuff like that. So it's been awesome.
Really cool. And it's probably a very necessary part for you when you're sitting at a desk all day. I know from me, my shoulders have adopted this position, and this is basically how I am most of the time. So exercise for me is the time when I can stretch this out. Yeah. And Pilates is amazing so much for that.
Better. Yeah. Pilates has been like a game changer for me.
Yeah. Oh, wow. Cool. Pilates it is. Well, we'll have to go together sometime. Yeah. I think that'd be a lot of fun. You show me how the ropes on Pilates too.
You'd like it.
I know I would. I used to do Pilates when I lived downtown.
Oh, really?
It was just across the bridge in Kensington, and it was a great studio, actually. I enjoyed going a lot.
Yeah.
And it wasn't quite yoga, and it wasn't quite exercise. It was this perfect blend in the middle, right?
That's exactly what I like about it.
Awesome. So Melissa brought... I asked her to put it down into 5 tips. We'll see where this goes. But if you have any questions as well, I'm going to put Melissa's contact information on the bottom of this video, so you can reach out to myself or to Melissa directly if you have any questions. But what is your tip number 1 for... Are we talking... let's talk about sole proprietors more than we do about incorporated, because I think most of us aren't incorporated yet.
And for the most part, a lot of the rules applied either, but in general, there are a few differences, and most people starting out are a sole proprietor.
Yeah. Okay.
So tip number 1 is to make projections, and I know Yvonne has this in her program, is going through your costs and how much it actually costs every month to run your business.
That's right.
There's a lot of fixed costs, and there's sometimes your meals and entertainment costs change and all that, but it's important to actually make a proper projection on that. If you're just kind of, whatever, I don't really want to look at it, I don't want to think about it, I'll figure it out later, it becomes very hard to make money. And I know that's what a lot of people do, but if you
I don't know what you're talking about. What, I can't just pick a number and then just see if that goes?
I mean, you can, but...
So what would be a disadvantage of having... the obvious one would be undercharging and not making any money.
Yeah, undercharging, not making any money. Or maybe you're priced high and you're doing really well, and all of a sudden you get smacked with a massive tax bill. And you're like, what do you mean I owe that much money? And it's like, well, you actually made a lot of money. But if you're not tracking that and projecting that, it's hard to know if you're doing good or you're doing bad.
Yeah.
And on top of making the projections, it's the follow through of being like, okay, April ended. Let me look at April. Was I on track? Was I not on track? And if you weren't, you need to kind of tweak what you're playing with and go, well, maybe I'm not pricing myself right. Or there's actually costs I didn't consider that are going into this.
Yeah.
So that's a big part, is just actually making projections and following through to reflect back on them.
And a big reason why I actually have that as part of the LEAP program is because I really want to encourage people to look at expenditures in a different way and not look at them as money out and lost, but as investments into a better way of utilizing your own time. So the way we talk about it in LEAP is through delegation, hiring an accountant that helps us with all of these books, hiring someone to do our video and audio editing, because it takes me hours to do that stuff. But in order to know the value of that, I need to know what my expenses are and what's in and what's out, right?
Yeah.
So I love that you're saying that as your first point, because I couldn't agree more with you.
Yeah, it's just so important to make sure that you have at least a goal or something to work towards too, because it's hard to know if you're just trying to fly by the seat of your pants and go, okay, I think I'm there, or you thought you were there, and then you're really disappointed if you aren't too.
Absolutely. What do you see more of? Do you see more people not making any money and being really disappointed that they undercharged the whole year, or do you see more people overcharging?
I mean, overcharging can also lead to not making money. So that's like a little bit of a double-edged sword. But there is a lot of people that will call us and be like, I don't know what I'm doing wrong. And sometimes it's just us looking at it and being like, oh, do this instead. And it can be such a simple fix of things like, I think you are pricing yourself too high, or you're not charging enough. And that way it does help with the disappointment, but it's all about communication. If we don't know, we can't help you.
Exactly. Yeah.
That's
and I think the habit is putting all the receipts in a shoebox, and then at the end of the year,
shoebox accounting is a real thing.
Yeah.
It is 100% a real thing.
It is. Oh my goodness. Yeah. So definitely communication on a regular basis. Establish a really good relationship with your accountant or bookkeeper, and have it throughout the year, and not wait until the last hour.
Yeah. Because if we know, it's easier to plan. Just like you want to make a plan, it's easier for us to go, well, this is maybe what you're looking like in tax if you keep going this way, and you should be setting this much aside.
Yeah.
And it just makes it
oh gosh, that makes so much sense. Yeah, that makes so much sense.
They're always better to get ahead of it.
Yeah, for sure. Cool. All right. So definitely know what your projections are, what you want to do. So is that a budget, or is that a separate point?
That would be a budget or projection. Some people really don't like the word budget, so sometimes they think it's a bit intimidating.
Right.
But if you go, I want to make $10,000 a month and these are my costs, that's a budget.
Okay. Yeah. But so make a budget.
Make a budget.
Okay. Tip number 2.
Tip number 2 is when to register for GST.
Yes.
So this is a question we get all the time. People will be like, I'm starting my business. I don't know what do I do with GST? When do I charge it? And the rule of thumb is if you've made $30,000 over 4 consecutive quarters, or say in one quarter you've made $30,000, you need to register for GST. And you have 30 days to do so. And as a sole proprietor, you can just set that up under your own name, and you just call the CRA and say, I need to register for a GST number, and you're registered and you start charging GST. So at that point in time, you need to make sure you add on the applicable sales tax for every service you're offering.
Right. And that applicable sales tax is the tax that I have in the province that I'm in.
Yeah. So in Alberta, we don't have a PHT or an HST, so it's 5%.
Yeah. So what if I offer services and products across to BC or across Canada or even to the United States or outside of the country? What do I do with that?
That can be a complex question.
Oh, okay.
There are some issues surrounding all of that, but if it's outside of Canada, you do not charge GST.
Okay. So I just don't charge it at all. And across Canada, I'm fine with the 5?
Yeah. Across Canada, that's like a normal thing. There can be PST or HST if it's a one-off thing. Okay. That can be different, but actually the GST and HST system is together, so that makes it easier. Mm-hmm. But PST is in each province, so that's when you just talk to your accountant. If you're going to do stuff like that, then we can come up with what makes the most sense. What makes the most sense?
Yeah, but for us starting out, 5%. 5%. Or if they're in BC, theirs is more, right?
They have a GST and a PST. Right. So you have to charge both of those.
Charge both. Okay.
Yeah.
Cool. All right. So definitely register if you're making $30,000 or more over 4 consecutive quarters.
So it could be, say, your last quarter of 2017 and 3 into 2018. If you've made $30,000, you need to register. It's not actually on a calendar year, which is also part of the confusion.
Okay. So would you suggest that just register and have the account ready, or is that
actually not? That's always an option. You can file nil GST returns. If you're starting out, they'll ask you how you want to set it up, monthly, annually, or quarterly. Yeah. And that usually depends on your revenue, but you should be able to get away with annually. Yeah. And that's the easiest way. If your first year you don't file a nil return, it takes no time. Your accountant can do it with you in your year end. It's very easy. Yeah. And then at least you have it there, so it's not another thing on top of your mind. On top,
especially when the stress is high as it is, yeah.
Yeah, but there's another thing to consider with GST. Okay. So there's 2 methods of GST. Did you know that?
No.
Okay. So this is also something that's not always well known. Yeah. But there's normal GST where you charge 5% on your invoices, and on all your expenses, you deduct the 5%. So you track that separately. And then at the end of the year, you file your return 5% on your sales and then 5% on your expenses, which are called ITCs. And then you file the return that way. Yeah. But there's a much easier method called the quick method. So the quick method of GST is if you are making...
Always like it when it's quick.
It is much quicker.
The quick
method.
So
if you're making under $400,000 of revenue, you can elect to use the quick method. And that allows you to take reduced rates. So you still charge 5% on all of your invoices, but there becomes a credit. So your first $30,000, you only have to remit 2.6% of that 5%.
Okay.
And anything over the 30,000, you have to remit 3.6%. So typically a sole proprietor doesn't have a ton of costs or costs that would have GST on them, and it works out 90% of the time to be more beneficial, and it's much easier. You're not having to break the GST out of every single expense. You just expense the whole amount, and then you go, my sales plus my GST times the rates.
Right.
And it's simple, but you do have to make an election. So if you're setting up and calling, you can call and set up the quick method at the same time.
Oh, okay. So you have to set that up in advance.
Yeah, it's an actual election you have to make. Otherwise, you're just typically set up under the regular program.
Oh, that's really great to know. Thank you for sharing that with us. Because I know some of my ladies do their own books.
Yeah.
So this, I'm sure, is going to be really helpful.
Yeah, it's something that's not always brought to people's attention, but it does make your life easier.
Oh, no kidding.
And usually saves you money, which is also a plus too.
Awesome. See, it's already worth having. I told you she's amazing. So, tip number 3.
Tip number 3.
Are we ready to move on?
Yep.
Yeah.
Be organized.
Oh my God.
So, I mean, it's a slightly obvious tip.
Yeah.
But things like keeping up your books and actually doing your bookkeeping and having some sort of filing system for your receipts if you ever need them, whether it's online or you use apps to help you with that. There's lots of different ways you can do it, but like being organized and getting down a system from the start will just make your life so much easier.
It makes it easier and it reduces your costs, your accounting costs.
And that's what we had talked about earlier. Is she's like, what's a typical price range? Well, my answer was it depends on how messy the books are. Because if someone brings me stuff nice and clean, we can do it a lot cheaper. But if I have a disaster that I have to figure out what the heck they did and nothing makes sense, you're going to pay for that. And it's a lot cheaper to do it right the first time than have to go back and try and figure out the mess. No
kidding. Oh my God. And I have been on both ends of that. I always thought I was generally a quite organized person, but it's such a stressful time for me to do any type of taxing or like it's just anything to do with Revenue Canada. I just get super stressed.
Yeah.
And I know I'm not alone on this. So
no, you're definitely not alone.
It was always that time you spend like the whole weekend. I blocked off the whole weekend and I would spend and go through the receipts and I would like try to match everything up and go through the reconciliation. And I'm like, why did I wait this long? Like it would have been so much easier if I had done it like on a quarterly basis even, right? Over like just doing it a year later.
Yeah. And that's, I know you've mentioned before, but software like QuickBooks, especially QuickBooks Online, it makes your life so much easier. And once you learn how to do it, if you do it yourself, it's actually very intuitive. It's very easy. QuickBooks offers free courses. I don't know if you know that, but they're like, I actually attended one last week and they're great.
Yeah.
There's things like I'm used to using desktop and I'd be like, I don't know how this works. And you're like, oh, that's where this is.
Yeah.
But you can download your bank. You can select rules. It codes things for you.
Yes.
And you go to reconcile and it's done.
Yeah.
But if you leave it too long, it can be hard to go back.
And that was what I found last year. I waited too long and my problem is memory. Like I don't remember what I spent this on or where this receipt is or why this is suddenly there. And then there was a bit of a mix up within my accounts too. So it was a bit of a headache. Yeah. And I know for sure I could have avoided it if I had done it more consistently throughout the year. So I have now blocked it in my calendar every quarter. I have like an accounting Friday.
Yeah. And I mean,
but
no one
it's
likes
necessary.
to do that, but it is necessary. And I mean, you can also hire that out. Like that's part of it too, is if it's not something you love, it's not something you're good at, and it's not something you want to do, you have to decide, is the cost for someone else to do it worth it? Maybe 100%. It is. Maybe it's worth paying someone $100 a month to
and when you
figure
have
that
your
out
projection,
you do a projection, you can
budget that in.
And then you know, okay, maybe I need to work just a little bit harder this month and make it all worth it for me.
Totally.
End, right?
Yeah.
Because if you're doing something you love, it's way more fun than spending an hour being like, oh, I hate this.
Yes, 100%.
Right? Yeah. So it's always about getting the right people to do the right things for you. Because that makes a huge difference.
It does. I can honestly say the first time when I hired, so I used to do my own taxes.
Yeah.
And then when I hired it out for the first year, I didn't even know how to pay my taxes that year, because it was amazing to me how fast I let everything related to that topic go. Like all the knowledge I had gained over the years of doing it myself, I literally just let it all go. Yeah. And so I called my accountant and I said, how do I pay this now? And he looked at me and he said, are you kidding me? You've done it for like 8 years by yourself and now you don't know how to pay it. And I said, no, I just let everything go.
We get questions like that all the time. We have clients that just like give us blank checks for like, we don't know what to do. And we're like, it's fine. We can pay it for you. It's simple.
It's good to have you. Yeah. Oh my God. That's awesome. So I think a motivator for, if nothing else, is to do your projections so you can budget in, having a bookkeeper, accountant on your payroll, basically, to help you with these things, because if it stresses you out at all, then you need to hire someone to help you do that, for sure.
Yeah, and also on the get organized tip is invoice regularly. I know people can be horrible at that, and no one wants to, it goes back to the accounting, no one wants to sit down and do it. But if you're not invoicing, you're not making money.
You're not getting paid.
Yeah, and you should put terms on it. Like, a lot of people are nervous to put terms and say, due on receipt. Who cares? Put it as due on receipt. You don't need to give someone 30 days to pay it. You're a small business. You're growing. You need that money.
Yeah.
And it's just making sure to actually do that and be on top of it and follow up with people that haven't paid you. Because
thank you for that. Yeah.
It's really important. If someone's not going to pay you, well, then you should not be doing work for them, because you're not going to get paid.
No.
So
yeah, exactly. You don't get away with it either. Like, you have to pay your bills. You don't, if you don't, you get your shock cable turned off. And if you don't, you get your power turned off and what have you. So why would you do business any other way? Doesn't make sense. And
it goes back to, say you're like, oh, I'll invoice them next month. I'll invoice them next month. Well, if you let 3 months go by and all of a sudden this person gets a massive bill, they're probably not expecting it either. Yeah, they should have thought that they were doing this with you, but it makes it that much harder to collect if you're not invoicing steadily.
And in today's world of technology, where we have so many methods and tools for invoicing, this should not even be a topic anymore. Like, you can literally just do it with the press of a button.
Yeah, and
or
it's
automate
done
it.
Emails, and like with QuickBooks, you can tell when someone's read it. Yeah. So when they go, I didn't get that bill, you're like, yeah you did. So there's so many great things out there to be like, no, that's not true.
Yeah, no, it's very true. And I should have asked you this prior to putting you on the spot on camera, but my accounting firm, for example, they offer a discount through them if I do QuickBooks Online. Do you have something like that available as well?
Yeah, so typically a firm gets a reduced rate, and I believe they get 50% off of any of the bucketed prices. Yeah. So
that's another advantage right there, because it makes a difference. Like, I on my own, without the firm's discount, I was paying something like $20 a month. Yeah. And right now I'm paying $13 or $14 a month. So it saves you money to do it that way.
And there's also promos that come out. Like, if you have a bookkeeper, if your bookkeeper's on it, there will be promos that they should be looking out for too. Like, I think in July you get 5 full memberships for $25 a month.
Oh my God.
That's $5 a subscription.
That's awesome.
Like, you don't even need to bill your client out for that at that point. It's just, it becomes easy. Yeah. And it saves everyone money.
Good tip.
Yeah.
Yeah. Awesome. QuickBooks rocks.
It does. It's great.
And I hope they sponsor this show.
Right? Get some little extra money for that.
Always thinking.
Okay, tip number 3. Which one do we want to go to? Should we talk about pricing?
Let's talk about pricing so that we can tie it back in from, I think this is the 4th tip.
This is the 4th tip.
Yeah, the 4th tip, because now we're bringing back budget. We now know we want to hire someone. How do we set up a really good way of pricing our services and products?
So there's a general rule in the service industry. So that would be any sort of consulting if you're not selling a product. It's called the rule of thirds or the rule of doubles, depending on where your business is at and all that kind of stuff. But essentially, if you're using the rule of thirds, the first third goes to pay yourself. So that way you're making money. The second third goes to recovering your costs. And the last third goes to actually making a profit beyond your salary. So putting money that you can invest back into the business. Maybe you need to make more money to put out more material. That's what the profit's for. It's to go back into expenses and generate revenue or assets or things you need to build your business.
Yeah. Yeah.
So that's just a general rule of thumb. And you can kind of price this out in a few different ways. And we just worked through this. You can either start with, I'm charging this much now, and work it back and go, okay, well, if I'm charging $5,000 and it's costing or 10 hours of time to do this, work out your hourly rate and go, was this worth it?
Yeah.
Am I actually only making like $10 an hour? Because sometimes it's amazing when you do those little exercises to be like, I'm not priced right. I thought I was doing okay, but maybe I'm charging $5,000 and everybody wants to work with me.
Well, it's kind of like you literally cross your fingers, you put the price out there, and then you just hope that at the end of the year, it all adds up somehow, and you make this perfect amount of money. But that's not how it works.
No.
I was just bitterly disappointed about that. So one of the examples you gave me, which I thought was really valuable, is you said, like, let's say you're making $50 an hour. So you are at this point where you figured out how much you make. So that $50 isn't what you made in revenue. That's what you made in revenue, but it's not actually your profit. So a third of that $50 goes to pay you.
Yeah.
A third of that goes to pay the
cost of the job
of creating whatever you have created or running your business. And then a third of it goes to profit or to back into the company
or extra money to pay things like income taxes.
Or to pay income taxes, right?
Yeah. So it's always important to consider income taxes in general. They're a big thing, and a lot of people tend to forget about them and not account for them.
Yeah, somehow we all think they go away.
Yeah,
it's like the Titanic isn't going to sink.
Yeah, when it doesn't you don't have a paycheck anymore and it's not coming off, it tends to be things you don't consider. And it gets to the end of the year and we tell you owe money, and you're like, what do you mean?
Yeah. And the worst one is GST, actually. Like, I know a few people that got this year, they were so surprised how much they owed because half of that was GST. It wasn't the tax per se, but it was the GST. But if you're collecting GST, you have to pay it. It's not your money. It's money you collected on behalf of the government. And you need to pay that to the government. So I actually do you mind if we go there? I don't know if you had a format for how to talk about this rule of three, but I really liked what we did with an example where we talked about, so if you are starting up and you have no price right now at all. Yeah. What steps could I do to get to a price, to a starting? And let's keep that in mind. Like, this is not carved into stone. This is liquid. We can always adjust it, but it's a starting point. Yeah. So the general rule is what we had talked about is, say you want to make $100,000 and that's what you want to earn. You have to decide, is that after tax income? Is that before tax income? So let's say it's after tax. So I want to make $100,000 after tax. Okay. So if you want to make $100,000 after tax, that's going to factor in, because really you add about 30% of tax, give or take. Okay. So really you need to make a profit in your business of about $130,000. So you take that, and what we had talked about is you divide it in half, and that gives you an hourly type rate. Yeah. And then from there, that's a great starting point. So say it works out to be $60 an hour. Yep. I'm not a math whiz, even though I'm an accountant, but let's go with $60 an hour. Yep. And that from there you go, okay, well, the service offering is 10 hours a time. Well, that's maybe a good starting point if you're offering a package to go, this is what I should be charging. Right. Or you can go, that really doesn't make sense. That's way too much money. Maybe you're putting too much time into each project. Or you have to reconsider and go, I'm still a new business. I'm starting out. I need to lower myself down, try and make a little less money this year to get going, and slowly increase your prices. There's nothing wrong with doing that. Absolutely not. It's a great way to start. Stepping is, exactly. Using like a stepping stone approach, I think is because one of the things that I'm very strong on is the element of asking for, like, invoicing, like, you know, to be able, the ability to actually hit the send button on the invoice, or the ability to have a first meeting, whether that is a discovery meeting or what have you with your client, and confidently sit across from your client and say, yeah, so my rate is $50 an hour or $60 an hour. And if you can't say that confidently, then you need to come to a point or a number that does roll off your tongue easily, because otherwise it's going to be a very long road, because you're just going to not ask for it ever. And that means no clients, that means no business. So now you have zero income versus maybe $20 an hour, $30 an hour. So whatever the case may be.
Yeah.
So you said that, you know, it depends on rolling it back. But I really liked earlier you said, so immediately take, let's say it was $60 an hour.
Yeah.
Immediately take that $60 and double it.
Yeah.
Or
triple it.
Because that hourly wage isn't going to pay the bills or give me any profit.
Yeah.
So the tripling it is because we have to pay ourselves, we have to pay our costs, and we have to pay what's the third one? The
either tax or making a profit.
So if we're tripling it right away, and that amount now 180 is a bit too steep.
Yeah.
That's when you suggested roll it back.
Start with doubling.
Yeah.
See how that goes.
Yeah.
And it's a good way to do, like, if you're making money and you're doubling it and that seems fair, maybe you don't have a ton of costs. Maybe you don't need to be tripling it.
Yeah.
Right? That depends on every business and everyone's different that way. So it's working around with that budget you made originally and going, okay, well, if this is what I'm charging, I'm working this many hours, where do you actually end up? Does it make sense?
Right.
But if you don't know that number, or you don't know how long it's going to take you to do something, it becomes a lot harder to price yourself.
Oh, absolutely. And the other thing that I'm just thinking of is it also helps not string the whole thing up with how many clients you need. Because if you already have your price, then like you said to me earlier, so now it doesn't matter if you have 3 clients or 4 clients, you are making money.
Yeah.
Versus if I say, okay, I'm going to charge $50.
Yeah.
And in order to get to that 100,000 now that I want to make this year, I'm terrible at math too.
A lot of clients.
Well, that's
a lot of hours.
Yeah, that's a lot of clients.
Right.
Versus if I say, this is my price, this is how much my service is.
Yeah.
Let's start there. And then I worry about accumulating the clients as they come. But there is none of this like wishy-washy back and forth.
Yeah. And it's also important to be confident in the price you pick, right? So if you're saying, when you lay it out and you go, yeah, this makes sense, this is how I'm going to make the money I want to make, and you're comfortable with it, like you said, it's a lot easier to say, well, this is my hourly rate. Or if it's a package and someone goes, why is it $5,000? Well, it's going to cost me 20 hours to make this. So it's a justifiable cost. And I think a lot of times, I know that's a huge thing in the accounting industry, is people are like, why would this charge so much money? And it's like, well, it took us 7-8 hours to prepare. If you think about that on what you make, it starts to make sense, right? Yeah. But that time component of knowing the time and knowing the rates is very
Absolutely.
important.
Oh, I love this, because that is so true, because a lot of us struggle with this whole value piece. Like, oh my God, how can I possibly charge this much? Well, when you do have the projection or the budget and you have worked through the numbers like we have just now, you will have a substantiating evidence around, this is what I need to charge in order to justify my business and what I'm doing for you. So I love that. That is such that's a very important component of the whole thing.
And it's the same thing as you grow, you can increase your charge rate because you're becoming more of an expert in that field. Yeah. I know when I started at the accounting firm, it's not the charge out rate I am now, because I've grown and I've developed and I have more skills and knowledge. Exactly. So I should be able to charge more for that. Yes. And it's the same way that you have to think about it.
Yeah. So start somewhere. But start somewhere that makes logical sense by using the rule of 2 or the rule of 3, and then work your way into the dream number that you have in your head, versus stressing out over achieving that dream number with $50 an hour and a gazillion clients.
Yeah, because
right?
it becomes not doable, right?
Exactly. You're setting yourself up for failure versus success. Yeah.
Yeah, and it's easier to go, maybe I don't want to work based on a 40-hour week. Maybe I want to work based on a 20-hour week. What would that look like, right? It's all calculating that hourly number and what you want and how much time you have to give to it.
So agree with you on that. Yeah, that makes a lot of sense. Thank you for solving that puzzle for us.
Hopefully that helps.
Oh my goodness. Yes, it does.
So tip number 5 that we're going to talk about is tax deductions. So all the kind of things you can deduct for tax.
Yay! My favorite topic.
Not everything is tax deductible, which just because you have a business,
what do you mean?
You can just write it off.
What? Oh no!
So there's things that most people know, but sometimes people forget, is meals and entertainment. So you're going and you're taking a client for lunch. That's not 100% deductible. You only get 50% of that.
Yes.
And same with if you're going to the theater or buying sports tickets. It's just something to be aware of. That's not really a full expense.
Yeah, I learned that one the hard way.
Yeah, most people learn that one the hard way. And I don't know how many of you golf, but golf is 100% not deductible. Club dues, fees, any of that. There's no way they're not giving that to you. Even though a lot of business is done on the golf course, they don't care. They're not going to give that to you. So that's a big thing to keep in mind is if that's your expense and you're budgeting, say $200 a month for it, well, your tax deduction's only $100. So you have to keep that in mind when you're doing your budget, that's not really, it's a cost cash-wise, but in your taxes, that does make a difference. And it can add up. Depending on how much you spend on that.
Yeah, for sure.
Another thing with tax deductions is employees and contractors. So there is a difference between an employee that you hire and a contractor. So someone you hire just to help you with your costs.
Like a freelancer.
Yeah. So some people take on an employees and they don't really think about it. And they're like, oh, whatever, I'll just have an employee. You have to register a payroll account. You have to pay payroll. You have to pay their portion of CPP, NDI, and there's a lot of work that goes into that. So a lot of times it's beneficial to hire them on as a contractor, but there's also strict rules that apply to contractors. So if they're only working for you, you determine their schedule, you supply all the stuff, they're not a contractor in the eyes of the government. So you have to be aware of that as well. And it's just something to keep in the back of your mind as you are expanding is how do I hire people? Do I just have people consult if I need more time doing this? How am I going to go about doing it? And that's also a good time to talk to your accountant and actually figure out how this is all going to work and make sure you set it up right because it can just be a disaster.
Oh, yeah. And it is a disaster because now you're also responsible for the livelihood of another person, right? Yeah. So it's definitely a sensitive topic.
Yeah.
I think for the most part, most of us are hiring mainly freelancers. So we are delegating, outsourcing the jobs that we're not good at. So that would fall under the category of we do not determine their hours. We do not determine their availability, really. We have, at the most, we have a contract with them that says, I have 30 hours with this person and that's about it. So that's fully tax deductible,
and that's
right?
fully tax deductible. You don't have to worry about that. That's a cost of doing business.
Yeah.
And it's just important to be aware of that. If you're hiring someone and they're helping you more and more and more and they kind of become an employee, you just got to reevaluate that. Because sometimes it happens quicker than you think. Just all of a sudden you need help. And you're like, I can't do this on my own. So
absolutely. Yeah.
Something to keep in mind.
Awesome.
Another one is automobile expenses. So that one's always a fun one.
It is.
And that goes back to part of your tracking and being organized is things like if you have lease payments, your gas, your insurance, your repairs and maintenance, all those kind of things are deductible. So you can track that, and there's a few ways you can do automobile expenses, but that's one. Or you can charge out kilometers by mileage to your business. And sometimes people prefer that because they go, it's 55 cents a kilometer or whatever the rate is in 2018 now. It changes a cent every year.
Yeah.
And then you can just go, I'm charging this to my business. I drove this much. And sometimes it's just less of a headache, especially if you're actually tracking your mileage because there's so many apps that do it. You can go start, go. It's done. It does it for you at the end of the year. You're not having to go back in your calendar and be like, oh, where was this? Where did I go? And the same thing works for you've done that? Just maybe.
I used to travel for work a lot, so I definitely had to keep track of the kilometers with my car. So I wonder if you lease the car.
Yeah.
If the company leases the car. So if you're incorporated, that doesn't work under sole proprietorship. But if you're incorporated and the company leases the car,
just don't ever do that.
Why?
It's not advisable. It can create more headaches. If a company owns the car and it's not being 100% used for business, there is all of these calculations that have to be done, and it can actually become a very big taxable benefit to you.
Oh, really?
And we always say, do not put your car in the company unless you're an electrician that has a van that has to hold all your stuff to do your job.
Is that right? Okay, well, I'm glad we talked about that. Yeah.
And I think everyone's a little different on how they view that, but the headache and the charges and the calculation, it's not worth it. Because you can keep it personally. You can charge mileage to the company. Yeah. And has no tax effect on you. Yeah. You don't have to pay tax on that. Yeah. But it's called a standby operating charge. And it's based on the price of the vehicle when you purchase it. Doesn't matter what happens. So as long as that continues, it's based on the full price of that vehicle. So it's not normally beneficial. And a lot of times companies don't do that and they don't make those calculations. And the government can come back and all of a sudden you now have this taxable benefit that you didn't know you had. It's very important to try and keep that separate. All right. So
keep your vehicle under your own name. Yeah. And track kilometers. Or charge the company for the kilometers.
Yeah, and also if you're...
And then you pay for gas with your private card as well, not with your corporate card.
Because that's the reimbursable part. Yeah. You can also get your employer to fill out a form that says what you're allowed to deduct as an expense. So it could be things like gas, lease payment, what they give you, and what's in your own name.
So that's if you're an employee.
If you're an employee. So if you actually go to a corporation, it might be worth looking into that option. But again, that's a discussion when you get there with an accountant. But for the most part, keep it separate.
Let's keep it simple. So we are sole proprietors. Yeah. I own my vehicle, or I lease my vehicle, and I track kilometers, or I
track all your expenses.
Track all the expenses.
Yeah, and it's easy. As long as you keep on top of it, it makes it's not a hard thing in the end. Okay. It's kind of a toss-up one way or the other, which is more beneficial. Depends on if you have a $200 a month payment versus an $800 a month, it can make a difference.
So do you have more on the tax deduction? Because another question just popped into my head that came up a lot for the ladies.
No. That was the last part of my test.
That was it?
Yeah.
For the expenses as well?
Yeah.
Okay. Thank you. That was really valuable. The number one question I get on the expenses, income, and all this is, at what point should I have a business bank account versus a personal bank, using my personal bank account?
I mean, as an accountant, my answer from the beginning is just do it. Just make a separate bank account, because it makes your life easier. And a lot of the bank fees are so minimal that if you keep everything separate, it's so much easier to track. And it's things like QuickBooks. You can easily just download that bank statement. That's only business expenses. It's easy to reconcile. You're not trying to be like, well, this was personal, this was personal, this was personal, this was business. It makes your life so much easier if you just do it from the start, have a clean cutoff, and go, okay, this is the account that I'm using to pay all my bills out of.
So have you noticed an increase in business account bank charges? Because some of the rates that the group was giving me in terms of what their banks wanted for a business account were just enormous.
Yeah, actually, a client had mentioned that to us, saying, why is this happening? And we said, what we think is happening is the government is wanting a lot more requirements out of banks and want them to be able to pull a lot more information than they had to. So we think that's why they're upping their fees. Is there's more work on the back end than there ever used to be. So the government wants a lot more information. Like now when you sell your house, you have to disclose that on your income tax return. You never had to do that. If you have a US bank account with more than $100,000, you have to disclose that to the government. And the bank needs to be able to verify everything like that. And that wasn't the case. So,
that's definitely like literally in the last few years, the difference was just really crazy. Because I know my monthly fee was like $15 or what have you for my business account.
Yep.
But the numbers that I've been given lately are closer to like $35 to $50 a month.
Yeah. And that's very common. And there's different banks you can go to too, like First Calgary and stuff like that tends to offer.
The credit unions have.
The credit unions seem to offer better things, but I mean, that's all up to you. But if you're a sole proprietor, you're not having a business account, you can just open an account in your name. It really,
and that's just
matter.
it. If you're not incorporated, just open up a separate account is what you're saying.
Yeah.
And just give it a different name but treat it as a separate account. That's a great idea, actually. So don't open a business account, just open another account.
What you're doing with it,
that's right.
Just you're a sole proprietor. It's just in your name.
That's a great idea.
It makes it easy, and that way you can track everything. And I always say it's also nice if you use a different credit card. A lot of people don't like to do that. But it does make your life a lot easier. You're not tracking
it does,
expenses.
Yeah, absolutely.
And so if a lot of stuff's going to go through your business, maybe that one credit card you have that gets really good points is the one you use. Or maybe you have another credit card that doesn't have any fees attached to it. And you might not get a benefit, but it makes your life a lot easier to track. So.
Yeah. I love that. So many great suggestions. That was so awesome.
Yeah.
I think I need to invite you back. We have weekly group calls that we do.
Oh,
and if you're available for one of them, I bet you after this session here that there's going to be more questions.
Yeah.
So, I'd love to invite you back because I just absolutely enjoyed all of this. Doesn't she have so much information? Like so much information. It's great.
Yeah.
Thank you so much.
Well, thank you.
Really appreciate you being here. Mwah! As always, the best conversations happen after the episode on yvonnewinkler.com/The Freedom Seeker Show. So go there, leave a comment, and let me know what resonated most with you and why. And while you're there, be sure to subscribe to our email list and become a Freedom Seeker Insider. You will get instant access to an audio I created called The 5 Steps to a Freedom Life, as well as some special content, exclusive giveaways, and some personal updates from me that I don't share anywhere else except maybe texting my BF.